Tesla's earnings come in the beat zone, but not impressively so. Is our follow-up to earnings announcement for today. This is Greg for Teslafaninsight. Thanks again for joining us for a second time today. We wanted to cover the earnings that just came out on Tesla and sort of give some feedback to it rapidly after the announcement. And so we're coming on to do that. As you know, Tesla just announced earnings. They came in maybe $300 million ahead when it comes to a $10.35 billion quarter on revenue, $436 million in profit, and the numbers were better on the earnings side, surprisingly, than they were on the revenue side, which I have to say I did not expect. We wanted to get on here real quick and sort of review the numbers a bit, what we think happens next. The quick setup can be challenging. So what I wanted to get into is just what I kept thinking about afterwards was implied volatility actually proved out to be true today, meaning that it was implied that Tesla would deliver a fairly tepid number that wouldn't cause the stock price any dramatic movement upon announcement, which we kind of saw. We knew what the basic revenue number was going to be. It was a question of how profit was going to spin off of that. And I was actually hoping to sort of wait out to see if there were any surprises in terms of guidance or revenue-wise for the year, or other surprises that were worth noting that were going to emerge from the earnings call. But we're not getting a whole bunch of yield from that at this point, so I figured I would just do a show in terms of what my thoughts were. The way things are going, it's kind of in line with sort of the new sheriff in town. I almost want to say the S&P is sort of the new Tesla sheriff that's out there. And what I mean by that is just the fact that since we've entered the S&P, there are these huge moves for Tesla during big announcements of earnings or other things that have sort of disappeared. And my expectation actually is what we've seen for the last quarter, which is we hear the news, we're then relying upon the analysts to really drive what's going to happen next. You know, the hedge funds get to respond instantly, and we saw the, call it 17 to 20 point drop associated with this, because perhaps the revenue is a little bit lighter than expected if there's going to be a beat on the earnings side. So my argument of where we're at now would be that I think it was a solid quarter, and everyone's waiting to see if China's going to produce more than expected to drive a big number for the year. And I feel like the way Elon is operating, he's definitely not revealing things. You can imply them from moves that Tesla's making, but they're not really giving away information that enables us to easily decipher what the future quarters are going to look like. So we then kind of have to rely on the techniques we've been using. The Model Ys from China are definitely not being shipped to Europe yet, and Europe and the domestic production of the United States is insufficient to service the needs of Model 3 demand in Europe. I was particularly impressed. I spoke with one of our viewers in England, and he was pointing out that the Model S is just too big for British roads, and he was sort of giving the same response when it came to sort of the Model 3, but in terms of interior space and small enough to fit in the roadways of Britain, the Model Y is kind of the winner, and the fact that it's sort of in short supply hurts Tesla's ability to gain market share. So on one hand, I'm kind of hoping China is going to meet that need, but Elon doesn't seem inclined to ship any Model Ys out of China at this point, so we'll just have to go with what we have currently. So all in all, yes, Tesla did fine in terms of the revenue and profit number. The movement of stock is a relatively small amount relative to, it's in line with the what was discussed in terms of the implied volatility numbers we talked about. There, it looks like that 800 is safe again another week, given that we don't have any response yet from analysts that would support what the large institutional buyers might choose to do. So my overall assessment is good quarter. I was going to say it would be a great quarter if we could flesh out, well, what's happening now, because one of the things I always found strange about the fact that the last quarter ended almost a month ago, and that means if we're in an 8-week quarter, we're 1/3 of the way there to knowing what the numbers are going to be for the next quarter. And the bugs in the Chinese operations have been worked out, and so now they're able to produce and sell at a higher rate than they were in the first couple of months of the year. So I'm really looking forward to them being a catalyst for a nice move for the stock. And one of the analysts from Loop Ventures pointed out that year-over-year comparisons are easy for Tesla in the current quarter, so we should see a very strong sort of yield from that coming out in this next period. So I would say that congratulations to Tesla, etc. The follow-through of the numbers that we got on number of cars produced versus what the actual revenue numbers seems to be pretty solid. We're hopeful that there'll be other side line items that allow us to say, hey, it was a great quarter, and folks and everyone is happy about what we yielded. And I really can't say that because we don't have much info on our biggest impactor, which is China, in terms of how well we are doing right now with the growth of their ability to deliver more vehicles and therefore get us to the higher end of the range. So the answer is good quarter. We got some unknowns, and I'm hopeful that a full analyst meeting will give us more data to work with, but you really can't argue with what we've seen, and we're hopeful that we'll get more data with which we can use to sort of affirm a terrific future going on for Tesla. I don't really have, I have to admit, that much to add right now. We're going to do another show in the morning once we've had a chance to read some of the analyst reports and get the full document from the analyst meeting. I just think it's just going to be the usual Tesla, Elon ducking, forecast numbers in terms of how many vehicles they expect to produce for the year and the quarter, and we're going to have to deduce what that number is. And so if he's telling us that that number is big, it's easy to see the stock pop in, but without that, I don't see that happening. And now we're relying on the analysts to work with the large institutions to get us sort of into that next tier of numbers for Tesla in terms of the stock price. So I'd have to say that as we look into the next quarter and we're in the same position again, it looks like our new implied volatility plan associated with what the S&P money and resources is doing to things is going to become our new norm. And the answer is you better get used to it, because we're getting movement of stock, but we're getting it over time, 1, 2, 3 weeks, and not getting our usual blast for 2 or 3 days of 50 to 100 points a day circumstances. So we will look forward to updating you, and we're grateful for you taking time out. This is Greg for Teslafaninsight. Don't forget your health tips. Please like and subscribe. Don't forget your health tips. 25 leg lifts a day. Don't go to bed within 4 hours of eating, minimum 2 to let the food digest. Prior to love making, a salad maximum limits the blood flow to the stomach, making it available for other parts of the body is another suggestion. And wanted to say tschüss in German, au revoir in French, lehitrot, Hebrew, choda hafez, Farsi, Strajije, Russian, ni hao mao Chinese, konbanwa Japanese, hey do Swedish, g'day our friends in Australia, and we look forward to more info as we get it. Have a great day. Bye for now. Thanks for joining us.